Welcome back to Tesla Short's Time Daily, episode 460, coming to you from Vancouver. It's May 2nd, 2026. There's a lot to cover in Tesla land today. Tesla has started high-volume production of the Semi with the first unit off the line at its Giant factory. The first public look at the Giant Semi factory reveals robots everywhere in the manufacturing process. This provides insight into the production approach for the electric truck. The extensive robot use shows the scale of investment in automation. Automation at this level supports the goal of high-volume output. It also showcases advanced robotics that could improve efficiency and quality. There is a clear focus on reducing labor costs and increasing precision in assembly. The first Semi has come off the high-volume production line. This marks the beginning of mass manufacturing for the electric truck. It moves the vehicle from development into actual commercial output. Fleet customers are now positioned to receive these trucks in production volumes. This advances Tesla's electric truck ambitions into real production. The business opens up a new market segment with potentially high demand from commercial fleets. On the technology side, the design is validated for heavy-duty applications. It requires robust battery systems and charging solutions tailored for trucks. For the industry, this represents progress in electrifying the trucking sector. The trucking sector is a major source of emissions, so this is meaningful. This milestone could encourage fleet operators to consider electric options sooner. It signals Tesla's long-term commitment to sustainable transportation beyond passenger cars. The robotics approach sets an example for manufacturing electric heavy-duty vehicles. It is a substantial investment that positions Tesla for future growth in this area. Overall, this is an exciting development for the expansion into trucks. With Tesla now producing semis at scale, it is worth checking how the company is performing in its established European markets. Taking a step back, the continued rebound in Tesla's European sales challenges some assumptions. Tesla posted significant year-over-year growth in April registrations across Europe. This continues the comeback after a difficult 2025. The growth raises the question of whether it is a lasting turnaround. It could also be a short-term uptick driven by new models or incentives. The registration figures serve as a concrete indicator of improved performance. Tesla has reversed some of the declines from 2025. Tesla's vertical integration is helping in this recovery. The focus on software and energy solutions allows adaptation to regional demands. This quick adaptation could help sustain the momentum in Europe. For the business, the recovery provides additional revenue streams. That revenue can support advancements in projects like the Semi. It can also fund progress in full self-driving technology. This strengthens Tesla's position in the global electric vehicle industry overall. It will be important to see if this growth continues in the next months. The strategies in software seem to be paying off in customer appeal. This rebound is positive news for Tesla's European operations. While Tesla shows progress in Europe, investors are also watching how it stacks up against other EV makers on Wall Street. Looking at the stock performance, a comparison of Tesla, Rivian, and Lucid in April is telling. The results highlight the competitive pressure Tesla faces from other electric vehicle makers. Investors are clearly looking at alternatives in the market. This situation could affect Tesla's valuation and funding for projects. That is a legitimate challenge worth acknowledging. At the same time, Tesla is positioned to address this through its established production capacity. There is also a lead in technological areas like autonomy and energy. By continuing to deliver on its promises, Tesla can set itself apart. This is different from newer entrants like Rivian and Lucid. The competition is intense, and it is important to monitor the share prices. Yet the advantages in manufacturing scale and technology provide a strong foundation. It will be interesting to see how these dynamics play out in the months ahead. April was a month where these three stocks were closely watched. The pressure comes from the fact that the EV market is still evolving. Tesla's lead in autonomy could be a game changer over time. Newer companies bring fresh ideas but also face their own hurdles. The energy business provides another revenue stream not available to all. Continued delivery on promises will be key to maintaining the edge. Away from the markets, Tesla's community on X has been reacting to these developments and other recent news. A post from the Tesla AI bot stating, "Should have been 15 years" has caught attention. It is generating discussion and curiosity about Tesla's timelines. Users have replied with positive affirmations like yes to recent posts. These replies reflect the community's supportive reaction to updates. Some have expressed sure in response to Tesla content. This type of interaction adds to the buzz around the announcements. One notable reaction is love for the Falcon wing so much. This shows admiration for Tesla's distinctive design elements. The Falcon wing doors in particular seem to resonate with enthusiasts. On the competitive side, the VW ID Polo is priced to match the Tesla Model 3. This pricing has drawn disappointment from some observers. It indicates how competitors are trying to match Tesla on price in the EV market. Such strategies could influence how buyers make their decisions. The overall engagement on X demonstrates continued interest in Tesla's direction. The comment about 15 years seems to refer to some development timeline. Enthusiasm for design features like the Falcon wings is not new. Observers are disappointed because it may not offer much differentiation. The community remains active in discussing all aspects of Tesla's progress. Keep an eye on further updates from the semi-production as Tesla continues to ramp up. That's your Tesla news for today. TSLA closed at $390.82, up $9.44, 2.5%. If you found this useful, a rating or review on Apple Podcasts or Spotify really helps new listeners find the show. You can also find us on X at Tesla Shorts Time. I'm Patrick in Vancouver. Thanks for listening, and I'll see you tomorrow. This podcast is curated by Patrick but generated using AI voice synthesis of my voice using ElevenLabs. The primary reason to do this is I unfortunately don't have the time to be consistent with generating all the content and wanted to focus on creating consistent and regular episodes for all the themes that I enjoy, and I hope others do as well.